Hey everyone! The artificial intelligence revolution is no longer just about flashy chatbots or futuristic demos. Behind every large AI model, every advanced algorithm, and every enterprise automation system, there is a massive amount of computing power working silently in the background. And as AI adoption accelerates across industries, the companies that provide this critical infrastructure are stepping into the spotlight. Two names that investors are watching very closely right now are CoreWeave and Nebius Group NV. Both operate in the fast-growing AI cloud and GPU computing space, supplying the raw computational power needed by developers, enterprises, and AI labs. They are competing in what may become one of the most important battlegrounds of the AI era: large-scale AI infrastructure. According to industry research, the global AI infrastructure market is already massive, valued at more than $36 billion this year alone. But what really captures attention is the long-term outlook. Over the next decade, this market is projected to explode to nearly $500 billion, growing at an annual rate exceeding 26%. This growth is fueled by businesses rushing to integrate AI into operations, automate workflows, analyze data faster, and gain a competitive edge. Cloud computing continues to evolve. AI use cases are expanding across industries, and regulatory requirements are becoming more complex. All of this is driving demand for scalable, specialized, and reliable AI infrastructure. In this environment, both CoreWeave and Nebius are positioning themselves as essential providers. However, while they operate in the same space, their business strategies, execution risks, and financial profiles are very different. So the big question becomes, which of these two stocks offers the better balance of growth potential, fundamentals, valuation, and risk? Let's break it down. Starting with CoreWeave, the company has been riding a powerful wave of demand for AI cloud services. As more organizations realize how expensive and complex it is to build AI infrastructure internally, they are increasingly outsourcing AI training and inference to specialized providers. This shift has played directly into CoreWeave's strengths. The company's revenue growth has been nothing short of explosive. In a recent quarter, revenue more than doubled compared to the previous year, driven by massive expansions in data center capacity and strong customer demand. CoreWeave now operates over 30 data centers and has built deep relationships with NVIDIA and some of the world's leading AI research labs. One of CoreWeave's biggest strengths is scale. Its customer base has grown and diversified, reducing reliance on any single client. Even more impressive is its backlog, which now sits at tens of billions of dollars. This backlog provides long-term visibility and gives investors confidence that demand isn't just a short-term spike. Technologically, CoreWeave has also established itself as a first mover. It was among the earliest providers to deploy next-generation NVIDIA systems designed for frontier AI workloads. It also became the first to offer certain high-performance server instances aimed at real-time AI, simulation, and advanced inference. These early deployments give CoreWeave a meaningful edge in performance-sensitive workloads. Operationally, the company continues to expand aggressively. Active power capacity has increased sharply, and contracted capacity has grown even faster. Importantly, a large portion of that capacity is still available for future sales, which means growth potential remains significant. Strategic partnerships are another pillar of CoreWeave's story. The company has secured multiple large, long-term agreements with major technology players, including multi-billion-dollar commitments that span several years. These deals mark a transformation from a niche GPU cloud provider into a global AI infrastructure platform built around high-performance computing, custom networking, and massive parallel processing. CoreWeave has also been active on the acquisition front, adding complementary technologies that strengthen its AI development ecosystem. These acquisitions are designed to enhance developer tools, workflows, and model deployment, further embedding CoreWeave into the AI value chain. That said, CoreWeave is not without challenges. Rapid growth brings execution risk. Supply chain issues and delays in data center deliveries have constrained near-term capacity expansion. While customer contracts remain intact, These delays have forced management to slightly lower revenue and operating income expectations for the coming year. Debt is another factor investors must consider. To meet surging demand, CoreWeave has taken on significant leverage to fund capital expenditures. As a result, interest expenses are expected to rise meaningfully. While management believes access to capital remains strong, leverage adds risk if growth slows or conditions tighten. Now let's turn to Nebius. Nebius is also racing to scale, but it is at a different stage in its journey. Demand for its AI infrastructure is so strong that nearly every new build is selling out immediately. However, this demand has exposed a major bottleneck: capacity. Management has been clear that limited infrastructure is currently restricting revenue growth. To solve this, Nebius has laid out an extremely ambitious expansion plan. Over the next few years, it aims to more than double its contracted power capacity, with a significant portion fully connected and operational by the end of 2026. This expansion will dramatically increase Nebius's ability to serve hyperscale AI workloads. But it comes at a cost. Capital expenditures are rising sharply, with spending plans jumping from roughly $2 billion to around $5 billion. This capital-intensive model means execution must be near flawless for the numbers to work. In the near term, Nebius has already had to adjust expectations. Revenue guidance has been narrowed and lowered, reflecting slower capacity ramp-ups than originally anticipated. While long-term growth targets remain aggressive, delays in bringing new infrastructure online have raised concerns about short-term execution. Profitability is also a work in progress. While the company expects adjusted EBITDA to turn slightly positive by the end of next year, it will still be negative for the full year. Investors are effectively betting on future scale rather than current earnings. Despite these challenges, Nebius has secured some extremely significant wins. Long-term hyperscale agreements with major technology giants provide substantial revenue visibility. These contracts validate Nebius's technology and suggest that once capacity constraints ease, growth could accelerate rapidly. Beyond infrastructure expansion, Nebius is also investing heavily in its software and enterprise offerings. The company has launched new cloud platforms and inference solutions designed to run large open-source models efficiently at scale. It is also expanding geographically, with plans to bring new data centers online across the United States, Europe, and other regions. Nebius has also focused on addressing key enterprise pain points such as GPU availability, predictable capacity planning, security, and compliance. Its latest platform upgrades integrate next-generation NVIDIA hardware and advanced management tools, making it particularly attractive to large organizations running mission-critical AI workloads. From a stock performance perspective, recent trends show a clear divergence. Over the past month, CoreWeave stock has been relatively stable, while Nebius has experienced a much sharper pullback. Valuation metrics suggest that Nebius appears more stretched, while CoreWeave, although not cheap, looks somewhat more reasonable by comparison. Ultimately, both companies are riding the same powerful macro trend: the explosive growth of AI infrastructure demand. CoreWeave currently leads in scale, revenue, and backlog, with strong partnerships and early technological advantages. Nebius, on the other hand, offers dramatic growth potential as it scales capacity and executes on massive long-term contracts. For investors, the decision comes down to risk tolerance. CoreWeave may appeal to those who want exposure to AI infrastructure with greater scale and visibility, even if leverage remains a concern. Nebius may attract investors willing to accept higher execution risk in exchange for potentially outsized long-term returns. In a world where AI is becoming foundational to nearly every industry, the companies powering that transformation could define the next generation of tech winners. And both CoreWeave and Nebius are positioning themselves to be at the center of that future. This is not financial advice.